Most people think Aadhaar is simply India's digital identity card. That is incomplete. Aadhaar is part of a much larger system designed to help the government identify citizens, deliver welfare payments, verify beneficiaries, and connect people with public and financial services. India's case is important because it shows both the power and the risks of digital public infrastructure. In simple words, the India case asks one major question: can digital identity make government services faster and fairer without excluding people or weakening privacy? India has a massive population spread across cities, villages, remote regions, and different income groups. Delivering welfare at this scale is extremely difficult. The government may provide food subsidies, pensions, scholarships, cooking gas support, employment payments, or financial assistance. But traditional welfare systems often face several problems. Records may be duplicated, fake beneficiaries may be created, money may pass through several offices, officials or middlemen may take a share, and genuine beneficiaries may wait weeks or months. Imagine the government sends financial support to a poor family. The payment passes through several departments before reaching the recipient. At every stage, there is a possibility of delay, error, or corruption. Digital delivery tries to shorten this chain. Aadhaar provides individuals with a unique identification number linked to basic personal and biometric information. It can help the government confirm that a person exists and reduce duplicate or false identities. When Aadhaar is connected with bank accounts and mobile services, welfare payments can be transferred more directly. This approach is often linked with the JAM system: Jan Dhan bank accounts, Aadhaar identity, and mobile connectivity. The basic idea is simple: identify the correct person, connect them to a bank account, and send benefits directly. This is known as direct benefit transfer. Instead of distributing cash through several administrative layers, the government can transfer money electronically. Supporters argue that this reduces leakage, speeds up payments, and makes welfare delivery more transparent. A citizen does not need to depend as heavily on a local official or middleman. This is a major advantage. Digital public infrastructure can reduce the cost of delivering services to millions of people. It can also help people enter the formal financial system. A person who previously had no bank account may receive payments digitally, save money, and access other financial services. But here's the catch: a digital system can remove one type of exclusion while creating another. What happens if someone's fingerprint does not work? What if their name is recorded differently in two databases? What if the internet connection fails? What if the person lives far from a service center? What if their bank account is inactive or linked incorrectly? A system may correctly remove fake beneficiaries while also blocking genuine ones. For a government dashboard, this may look like improved efficiency. For a poor family that does not receive food or money, it is a serious failure. This is why welfare systems need backup options. Digital verification should make access easier, not become the only door through which citizens must pass. Human support, correction systems, offline alternatives, and appeal procedures remain essential. Another major concern is privacy. A digital identity system can connect information across welfare, banking, taxation, healthcare, and other services. This can improve coordination, but it also creates the possibility of surveillance, misuse, or data breaches. The same system that helps verify a pension payment could also be used to build a detailed profile of a citizen. So the real issue is not only whether data is collected. The issue is who can access it, for what purpose, for how long, and with what oversight. Digital public infrastructure must include legal protection, cybersecurity, limited access, and clear accountability. Convenience without privacy can become control. India's digital transformation goes beyond Aadhaar. The country has also developed digital payment systems and platforms that allow banks, businesses, government services, and citizens to interact more easily. This is why India is often discussed as an example of digital public infrastructure. Digital public infrastructure means shared digital systems that different organizations can use to build services. Think of it like public roads. The government does not manufacture every vehicle. It builds common infrastructure that many people and businesses can use. In the same way, digital identity and payment systems can become foundations for banks, technology companies, welfare agencies, and public institutions. This can encourage innovation. Small businesses can receive digital payments. Citizens can access services through mobile phones. Government benefits can move faster. Private companies can build new products on top of shared systems. But strong infrastructure also creates dependence. If the digital system fails, millions of transactions may be affected. If one major identity record is incorrect, the mistake may spread across several services. If cybersecurity is weak, the consequences can be enormous. That is why digital infrastructure must be treated like electricity, banking, or transport infrastructure. It requires maintenance, security, backup systems, and public oversight. Another challenge is the digital divide. Not every citizen has the same access to smartphones, internet connections, literacy, or technical skills. Urban professionals may find digital services simple. An older person in a rural village may not. Women in some households may have less access to mobile phones. People with disabilities may struggle with poorly designed platforms. So a service can be technically available while remaining practically inaccessible. Digital government should not be judged only by how many services are online. It should be judged by whether ordinary people can actually use them. India's case also shows that scale changes everything. A system serving millions of people will always produce errors. The important question is how quickly those errors are corrected. Can citizens update their information? Can they challenge a rejection? Can they receive help without paying a middleman? Can they access support if biometric verification fails? Technology should reduce administrative power over citizens, not make citizens helpless in front of an algorithm. But here is the brutal truth. Governments often celebrate digital systems by showing how much money was saved or how many transactions were completed. Those numbers matter, but they do not tell the whole story. A welfare system is not successful only because fraud decreased. It must also ensure that genuine beneficiaries are not excluded. Efficiency and inclusion must be measured together. India's experience demonstrates that digital identity can strengthen welfare delivery. It can reduce duplication, enable direct payments, expand financial access, and support large-scale public services. But it also shows the risks of biometric failure, weak privacy, digital exclusion, incorrect records, and excessive dependence on technology. So Aadhaar is not simply an identity number. It is part of a broader experiment in how the state identifies people, transfers money, manages information, and delivers public services at enormous scale. At the Learning Studio, we will not study India's digital system as either a perfect technological success or a dangerous surveillance project. We will understand it as a policy trade-off. Because once you understand Aadhaar and digital public infrastructure, you stop asking only, did the government digitize welfare? And start asking the deeper questions. Did benefits reach the correct people? Were payments faster? Were genuine citizens excluded? Was personal data protected? And did technology make the state more accessible or simply more powerful?